The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, folks, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
We're at 2092 on the S&P cash. The longer we sit here, the more likely we sell off into Friday's close instead of bounce. So off just 5 points now. Volume has shrunk from yesterday, 2.35 billion shares. I would not be going long here. We'll talk about those reasons, but they are headline news reasons. The news tends to get to a crescendo somewhere around election time, and I would not want to be long any equities going in to the weekend. And we'll discuss that just a little bit. But at this point, the headline risk is extremely high for being long in this market. Could you bounce 20 points? Yes. Could you also go down 70 or 80 points with the wrong headline? And the answer is also yes. I suspect that the best we can hope for is a flat, somewhere flat close on Friday, tomorrow's close around 2100. Again, you get the one wrong headline or a random act of journalism, and 2030 would not be out of the range of possibilities for the close tomorrow going into the weekend. Volume is not picking up yet, but we haven't got a bounce. Normally, when you get to this level in a Thursday afternoon on a weekend after being down, what are we down? About 80 points off the recent highs on the S&P cash. But I don't see any sign of buying. I don't see any sign that we've had any kind of cataclysmic sell-off. I don't see any capitulation. I don't see all the normal things that we see when we get a bottom. And, of course, stocks not acting correctly either. Anyway, let's get into a little bit of history here to start the show off.
That it's all just a little bit of history repeating.
On this day in 1948, the day after Harry S. Truman defeats Thomas E. Dewey in the U.S. presidential election, the Dow Jones Industrial Average slumps by 4% to 182.46 on the belief that Truman will be too soft on communism. By November 10th, the Dow has lost 9.4%. So pretty quick move down after that election. Sometimes things happen. Not exactly sure how being soft on communism would affect the stock market, but at least this is what is written back in 1948. I have a feeling that they were more interested in the fiscal policies of Mr. Truman than anything else. And kind of thinking of the first Trump presidency, you got to think about Truman yelling and screaming at the reporters over his daughter. Very, very, very Trump-esque, I would say, if you know the story behind that. But just interesting. What else is going on out there? We've talked over the last few weeks, maybe even a month ago, about maybe a sea change in the way that uranium is collected. For those that missed that discussion, we said, well, there may be cheaper ways to get it, maybe cheaper ways to get it out of the ocean than get it out of land. But most of that was based on trying to find uranium-235, which is the non-stable stuff that works wonders in a bomb. The 238 stuff, not so much. and only about 0.75% is actually the stuff that goes boom. So it's kind of, uranium's not rare. It's just that the stuff that goes boom, uranium-235, is fairly rare, just being 0.75%. And because it's all the same stuff, incredibly hard to just get that 235 stuff. Millions and millions and billions of dollars have been spent on making facilities just to do that on an industrial scale. The Russians fired up yesterday their fast neutron reactors, and for the first time it has gone to 100% power. These new designs may make a big difference in stocks like CCJ. And in fact, I was going to pop that chart up because I wanted to look at it before the show, didn't get a chance. Let's take a quick look at it. CCJ did have a little pop yesterday out here. I don't know if this had anything to do with the Russian discussion about them being able to start selling these fast neutron reactors. But the big deal on these is that they will use both uranium-235 and 238, giving us a mountain more material that can be used. And of course, now you don't have to worry about all that nitpicky stuff of just getting the uranium-235. You can use the 99% uranium-238 in it. There are a few things that are big benefits. The waste decays to harmlessness in centuries rather than 1,000 years. The other thing is it's a bit safer because it's when you actually make the metal version of uranium for these things, it is very thermally conductive, and the reactor can shut itself down without surpassing temperature limits. There is some other benefits that aren't so safe, but on the whole it is. And of course, the Russians are actually working on these, and this first version that is working and will now be for sale uses sodium as the coolant instead of water. The big safety feature on this is all the 3 Mile Islands and the Fukushimas are all based on using water as the coolant, and it's very easy to split the oxygen and the hydrogen apart, making a opportunity for a Hindenburg inside the buildings, and that's what we saw in Russia's explosion. The hydrogen builds up along with the oxygen until something sets it off and a giant bomb blows the top of it off. What is it, Pripyat? I think that was actually the town that the Russian reactor was in. But the exact same thing happened in the Fukushima ones, which is you shut this off, the reactors overheat, create a lot of oxygen and hydrogen, and suddenly you got a Hindenburg inside a building. The thing blows up and the top blows off, and uranium and radiation goes everywhere. Anyway, we'll look at CCJ when we come back, but it does look like this is going to be a sea change. Much less expensive fuel, much less to go away. And of course, why we don't do much in reactors, China and Russia and many of the new third world countries are. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, very interesting to see. I kind of thought maybe a month ago that this slide in CCJ was on the ability to process uranium a lot cheaper with a new laser version and being able to get uranium out of seawater. These new fast reactors certainly probably not going to find a home here in the United States, but certainly all over Russia and all over China. In fact, I think Russia's going to be selling versions of this to the Chinese, the Vietnamese. Pretty much the whole world is probably going to be doing a lot of work for power in the near future off of uranium and not either coal or the things that they may not have access to depending on the country. Always thought maybe there'd be a bounce out of here. This thing did have earnings, had a nice little bounce yesterday. But let's watch this in the near future. This thing has the ability to really run, and we shall see what is happening. What else is going on out here? I think there was one other thing going on. No, it is a mad market. Let's go ahead and take a look after the bell tonight. We've got Echelon Pharmaceuticals, Activision Blizzard, Air Methods, AVG Technology, the virus software maker, Bankrate.com, Wi-Fi, which is Boingo Wireless, Callaway Golf, Carbonite Incorporated, CBS, Clean Energy, Computer Sciences Corporation, El Poco Loco, EOG Resources, which probably be interesting to anybody in the natural gas business to see how it's doing, FireEye, the security software, Fossil, the watch company that has fallen far from grace, Glue Mobile, GoPro, Skyworks Solution, may give us a little bit better read about how Apple is going to do going forward, since about 80% of their business is that. Solar City, again, who knows what's going to happen to that, Mr. Tesla. Certainly, the stock continues to bleed. The Tesla stock does on probably an ill-advised buying of Solar City. Starbucks, how much has that higher coffee price affected Mr. Starbucks? TrueCar Incorporated, Twilio, Ubiquity Networks, who I just love their products. Well, maybe we'll look at the stock. And Universal Display Corporation. So a few of those tonight. I don't see a lot that could move this market, and that may be very tough to get into. So let's get back to the rest of the market, which is already in progress. You can give me a call at 877-927-6648. Somebody, if you email me in the last 2 seconds of the show, I can't get to it. It takes a couple of minutes for your emails to get to me. But Wayne, from, where is he? Wayne is apparently from Lutz, Florida. Didn't in either one of his emails tell me where he was from. And of course, you know, on this show, if you do not tell me, then you are from Lutz, Florida, and no one wants to be from there. Wayne asked me to take a look at TBT. Oh, why shouldn't you be from Lutz? I could tell you, but then I'd have to kill you. TBT out here kind of came back up into this 2.1 million share day on June 23rd. My guess, it has been for a while, that this gap is where this thing is headed, and you want to look at the volume there. This thing had a decent down day on the June 3rd with 2.7 million shares. You got into that gap on 2.7 million shares on October 27th. You pulled back a little bit, but my guess is that you want to look at this thing at about $35.40. What else out here? Take a quick look at all this stuff. Okay. Is P short from the open Silk Road Polar? Peace frame. Okay. Just looking at a few other things, so we'll look at that. Okay. Question from the email already coming in is what? What is my headline risk? I'm going to say, I know a lot of people are not going to like this, but reporting over the last day is basically linked this whole deal with the emails all the way up to the level of the president. Why he said he didn't know anything about it. There's more than 7 emails showing different email addresses that he had to get to email people on that server. So there's nothing new, no way that he can say he didn't know. But more than that, the FBI agents are getting incredibly vocal in the news. And it wouldn't surprise me that you got a couple people looking at jail time. And wouldn't surprise me that either one of those flips. You got a 4-year-old daughter with both her parents looking to go to jail. And you got FBI people saying they got dead to rights. They've got conversations in taped conversations. Plus 2 laptops that everybody said were destroyed suddenly were not destroyed. They let everybody find out why they continued an investigation. I would not be surprised, and politically they may or may not be true, but it may not matter going into an election. Everybody's a little jittery. Everybody's a little nervous. Someone can make a giant claim, and that is why I'm saying headline risks out here, not reality, not the truth, but headline risks could be enormous over this weekend, and why I would say you'd probably want to wait until Monday before you want long. I have a feeling a lot of people are not going to want to be looking at headline risks going through the weekend. They're going to want to see how this all settles out. So we may not go lower, but again, my risk-reward scenario is that if we get nothing, maybe we bounce 20 points in the S&P cash. If we get some horrific headline, true or not, we could see 2030 in a heartbeat at these levels. Right now, we're at the first level of support that we've been looking for. But I have no signals, and in looking at the charts, don't have a lot of charts that say anything is saying that we stop here. My call right now is that we sell all the way into Friday's close, and we may even start off with a gap down in the morning. Volume is 2.5 billion shares. What do we have going on out here? Big stock moves. We'll go through all those. QGIN, nice pop on earnings today. Just got back up to this gap down that had 2 million shares. We've got 2.2 million shares already, so this one looks fairly decent. You can make a case that this did cut down, fill its gap up on lighter volume. This thing did gap up on the 29th of July with 4.3 million shares, got back into that gap with 1.4 million shares, and then blew it away today to the upside. Got a lot of stocks to look at here, a lot of moving pieces. We'll be back for more of the Power Trading Hour.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And had a question here. I kind of answered this before, but I will answer it again. Will Trump be good or bad for the market? And the answer is that it does not matter. There's only probably bad and worse for the market going the next 6 months to a year. That will be the Fed tightening interest rates. That will be wringing the excesses out of the market that have happened over the last 5 or 6 years of QE and everything else. If you wanted to ask me what happens in a year from now, I may have a different opinion, but I don't think that anybody's thinking that far ahead. But in the first year, it won't be any different than 1980. My guess is that we will have tightening that is well and desperately needed to head off even worse unintended consequences in the market. That we will probably have 3 or 4 rate hikes at least after the one in December. That will be next year. And that'll just take us to what, 2.5%. But people will freak out even on that. And of course, so many companies out here are just based on free money. As Mr. Buffett says, when the tide goes out, you see who's swimming without a bathing suit. And that is, I think the market's already starting to look at that. And no, I'm not looking for any kind of Christmas rally. I just think, like I said, it's either going down a little or going down a lot. And we're going to have to see, at least in the short term, in the next few weeks, I'm not thinking that we stop going down until I see some sign of capitulation. James Wyckoff, one of the patron saints of price and volume trading, called it a selling climax. There was something out there that really popped. Now, can we pop 10 points tomorrow? Yes. But my guess is that until we get some kind of decent signal that this 2090 level is something more than this, the next 10 or 15 minute chart out here showing a temporary bottom, I will be nervous. The best thing, if you are bullish out here, is to watch this market go sideways for 3 days and then probably have an election without any kind of contention about who won or lost. And that may be a tough thing to get in the very high tensions that we have. So it's very tough for me to paint a rosy picture or to grab anything off the bottom. If it was I just don't see the risk reward in going long before next Tuesday. If maybe the polls come in and just show an overwhelming victory for one of the other candidates, probably not a high probability of that. But on Wednesday, if you get a election and it's pretty much handled, not a lot of discussion on who won or who lost, that's going to be a great deal more of it. So I don't think that you can put lipstick on this pig, no matter who gets elected. It can just get bad and probably worse. So, and you know, how long has the market been going up? You just think it's going to go up forever, like Jack and the Beanstalk? No, it doesn't. It doesn't. And one of the other things, in fact, I was talking to one of my subscribers, is I still can't find a lot of people that are talking about shorting this market. The data that I look at, it still shows that they're not shorting this. It goes down for one day and they short, and the first little pop that looks like maybe someone is going to try to squeeze them, they're out of it. And then the next day we go lower yet again. It just looks like there aren't a lot of shorts wanting to jump on this on the bandwagon here, and it makes for easy downside action without people that want to cover the next day. I think I'm one of the few people out here that's not expecting any kind of a bounce until everybody that's asking for a bounce quits asking for a bounce. The old watch pot never boils kind of scenario out here. 2.55 billion shares. Now, what else do we have going on out here? You can give me a call at 877-927-6648. You can email me at path@tfnn.com. But I'm thinking at worst, I get to cover my shorts out here Wednesday at somewhere around this level. At best, maybe I get down to 2030 or even lower if everything goes to hell in a handbasket. But I'm not looking at higher prices. What do we got here? RIG is up 6% today. A little bit of respite in the move down in this offshore rig drilling company. Volume is okay. This is not getting anywhere out. There's no sign that this is a long-term bottom. You do have the $8.34 low out here on April 7th with 53 million shares. That's kind of what you want to be looking at, somewhere between that and 766. If you are thinking bullish on oil, I am not. I think we're just in a trading range probably from 38 bucks to probably 52 bucks now. I don't see a lot of change. Okay, what else do we have going on here? Next stage, medical, take two. Entertainment, TTWO. What do we have out here? Nice pop. It is above, not a lot of volume though, above the September 22nd high that had 1.7 million shares. Well, you do. I don't know why I said that. 4.3 million shares. We do. Double the volume. Nice little thing out here. This is a definite breakout. Let's see if there's anything back out here. No. You'd want to see how this thing actually comes back to this breakout level, which would be $46.78. This would be interesting if it does come back to that level on lighter volume. 3D Systems, this thing is perpetually short, one of these stocks where everybody's just way too short. It bounced a little bit more. It's kind of pulled back out here. I still think that you want to see this $11.98 low tested. That's the August 2nd low. Energy, unfortunately, did come in a little bit stronger from the last two legs, the October 5th leg down to this November 2nd leg, and more energy. I still suspect that 11.98 is what you're looking for. Test of low volume down there and a some apathy, total lack of interest in this might finally get a bottom. No guarantees just yet. CyberArk, another one in the security business. I think we've got FireEye after the bell tonight. This one did gap up a little bit. You would think that these things, with all the email hacking and WikiLeaks every day, would be doing better. I did like the way this thing was bouncing out at 40, just over 44 bucks since the October 19th low. You got to bounce. It's got on some volume. It's sold off a little bit. My guess is that you're going to get another this thing at around 45 or just a little bit underneath that. You again want all the energy and volume to just come out. You want something like 250,000 shares. You want this thing to go sideways for a few days and start seeing people accumulating this stock before you buy it. So it's going to be some patience going on out here. Let's take a look at FireEye coming out after the bell. Speculate with you. Okay. We will be back shortly. Give me a call, email me, message in the chat.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And had a question, look at the TLT. Do I still think that it pops down to this gap that's just under 128? And the answer is yes. This thing is about as good looking of an ABC down as you can get, and that 128 number comes up. There are a few lower out here, but I think that probably is the most likely. And if I was thinking about going long, I think that's exactly where I want to be looking, which is that 128 to see whether or not the bonds really kind of throw up there. There's 128 to 127. I suspect there's more than an 85% chance that we get into that. And it's probably going to happen with a big gap down. This thing gapped down on the 9th of September, gapped down again on the 27th of October. Probably going to go over here for a few days and then gap back down. And at that point, we're going to see whether or not this thing can hold that 128, 127 level on the TLT. To me, that is the guiding light and the canary in the coal mine for whether or not the market can hold up. Other stocks, as I've always said on here, if you want to hitch your wagon to a fast horse, it's probably not going to be in China. It is where stocks and huge amounts of money go to die. Wynn Resorts down 9.5% today. It is blowing through its previous lows, and it's doing so on volume. 87.07. Everybody, when this thing ran back up to 109.50, it was because of the absolute tiniest bounce in additional revenues in the Macau gambling sites. We brought that up. But, I mean, it was tiny. I mean, it was like 0.5%. It was well within the margin of any kind of noise in a signal of just going up or down. But everybody believed they had to be in it. A lot of people short. So always interesting to watch a short squeeze, which I thought this one had. I didn't short it, probably should have. I was in the IBB at the time and thought that one was a better bet. And in retrospect, it was. But still looked to me like the almost a pathological need to believe that China is the land of milk and honey for U.S. companies. You're not going to get a fair shake there. And my guess is that this continues on. A lot of this had to do, and the move off this $50 level had to do with the CEO, who's kind of famous, buying it around that $50 level, and everybody thought that they knew, or he knew something that they didn't. But this whole swing has been in a lower revenue model for Macau. I just don't understand why the thing went up. But that 109.50, I suspect, is going to be out there for a long time before it gets retested, no matter what the Chinese do. There are three gaps. This thing could come right back down to the $52 level if the rest of the economy starts to pull back some. Other stocks, Papa Murphy's, First Solar, we looked at that. Bluebird Bio came out with earnings. Let's take a look. This seems to always lead the IBB a little bit. This is down. It spiked all the way into the lows and came off. I'm not exactly sure that that isn't a bad tick down at 37.05. We have had volume, though, so there's nothing new in that part of it. So we'll continue. Question, is this sell-off really about the election? No, I think it is about higher interest rates and higher interest rates for the next year. As I said, the Fed likes to try to squeeze all the unintended consequences of them monkeying around in the first year of a new president so that they can get it out. Kind of did that with Obama. They're going to do it with whatever president is the next president. The first year, they try to, it is very tough to have a great first year as a president. What they try to do is make things look good on the fourth year. So if they want to get reelected, they do. And I don't know if there's an implicit deal made behind the curtains. Maybe we see it one day in an email, but it just seems like that is the pattern. And caused a big ruckus when they didn't do it quite soon enough in 1992 and caused probably the Clintons to get elected in 1992. They started the thing a little bit early, and the economy didn't come back. But by the time Clinton was inaugurated, the economy had turned around in the next 2 months. What else? Anyway, Bluebird Bio down with heavy volume. You want 35, 37 tested, or maybe 38, somewhere in that area. But kind of just pierced it a little bit today. Still down a bit, but I don't see anything else out here. Question is whether the IBB still gets 240. I don't see anything that says this thing stops. It's down to 240.49. 240 is that June 27th low. I suspect that there's an 85% chance we test that in the next few days. So pretty another 10 points. No, would I short it now? No. I've got to have the risk reward in any trade I get into, even if there's 85% chance of this moving down 10 points. The time to short this thing was when I bought puts on this thing back at 297 or 298 or something like that. The only mistake, not taking the Novembers instead of taking the Octobers. Made a lot of money and left some on the table. What else do we have? Mr. Fake Book is out here. A lot of people yelled and screamed at me, called me a heretic, called me unclean, threw stones at me because I dared say Facebook was not going higher. I stand vindicated, and in course, in a true fashion out here, I always have one thing to say.
I informed you thusly.
I informed you thusly. Down on heavy volume, down below 120. Like I said, I wouldn't have been short this thing for $10. It's probably going to go sideways for a little bit. I need more than a 10% move in a stock. What is this? 130 to 120. Yeah, 12%, 10%, whatever. I suspect probably going to bounce here in a few days. Everybody's going to still think they want to buy it. But now you've got a good sign out here of where to short it, and that'd be around 127. We'll look at the other stocks in the fangs out here. Amazon, of course, this thing gapped down, came back up, didn't even make the gap. So again, in Facebook, you may have the same thing. Going to gap down, kind of pull back up for a few days, head back down. The only good thing is you've got a little bit of a doji out here that might signal a short-term low. I still suspect this thing is going to hit 740 in the next few days because that's what got hit after hours when the earnings whiffed and the expenses started going higher. Facebook, Amazon, Google. Google's out with a new product I looked at last night. It's kind of interesting. It's the answer to the Alexia from Amazon. But as I said, so many of these stocks headed back to these double gaps. Google probably fairly close. If you really liked it and thought the market was going higher, which I don't, pretty close out here. 770 with light volume could be a buy on this one. But we'll talk more about this on the flip side.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
G came out with earnings last night. It looked okay then, but not so much now. It has melted overnight, gapped down. Volume hasn't picked up that much. The next stop is about midway in this gap, which would take you to about $55. I don't know what else you can say about it. Of course, in the past, most insurance companies have all been about how much money they can shove in the stock market and get that money back. If a lot of people think the stock market's not going to give them the returns that they got in the past, especially insurers, can see weak returns. But this looks, just in the short term, back to 55 on it. GoDaddy, GDDY, the Internet Registrar, broke out didn't really have a big sign of strength when it did. Climbed back into this below this December 8th high of 2015, down and volume picking up a bit today. On this one, my guess is that you'd look at 29.50 as a target when this did gap up on some decent volume back on the 4th of August, 4.9 million shares. If you could get back in that 29.50 range, you might want to look at it if it comes back down there on lighter volume. AIG. Let's see what else we have out here that's actually moving. Triumph Group, Zynga Time, Whole Foods. Let's take a look at Whole Foods. If it was the one stock that I thought looked like might have something out here to bounce. The bounce has had some decent volume, although it's given a great deal of this back. Margins continue to be fairly interesting, high interest. This gap down on the 7th of September was 16.8 million shares, kind of only getting about 12.3 million shares. This went and did exactly what I like, and that is fill about half the gap and then pull back out here. There's not enough money for me to get involved in this, but if this one would to base out at around this $28 and maybe $27.50 and higher range for a few weeks, this may be finding a bottom, but it's going to take some time to consolidate. Scott's Miracle Grow, SMG, up here fairly nicely. Man, I mean, just the link to marijuana growing seems like there's no end to this. And as we talked, it was one of the plays that you could see on marijuana stocks in the near future. And probably better play out here, but you need this thing to pull back. You can get a nice pullback on this, but in the future, the whole idea of pesticides and fertilizers for marijuana growers seems to have put more than a little spark in Miracle Grow. So let's wrap this up before we leave, and I'm back tomorrow. But again, I don't see any real reason to be a hero out here. I know a lot of people that seem to me acting like there's some kind of hero buy out here. That means that they're going to make the thing's going to instantly run back up to 21.50. I don't think that there's anything out there like that. Again, 20 points higher as a possibility. Maybe you pop back up to 2010 tomorrow. To me, that wouldn't be a big deal. I would still stay short. But on the downside, maybe we could see 2030 on the wrong headline or the right one, depending on whether you're short, in a very nervous market that has failed to bounce, going into a weekend when just about anything can happen. I think that if you want to go long, I would hold my breath, count to 10, and wait till next Wednesday. In the meantime, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.